You've probably seen some of our videos where we talk about investors being in a matrix, which if you've seen the film The Matrix, there is a virtual world that everybody believes in, but the truth of the matter is everybody's plugged in to the matrix in their little cocoon, being fed whilst they generate this virtual world. Now, I think there's a matrix in the investment world, which is a construct of the funds management industry. No criticism of it, but you have to understand that the funds management industry has perpetuated a story that suits them and doesn't necessarily suit their clients, and the matrix is one that tells you relative performance is a good measure. And clearly, for a self-directed investor staying at home, for Marcus Today members, for investors in our fund, and some fund managers have recognized this as well. You'll see Nick Griffin at Munro talks about an absolute return fund without a benchmark. Actual returns are far more important to the real person than the relative returns that the funds management industry judges itself on and tells you to believe is how they should be judged. So a fund manager will pick a benchmark and their fund will be compared to that benchmark. And the whole idea of funds management is to get your wiggly line, which is your performance, above the benchmark wiggly line. Once you've got your wiggly line above above the index's wiggly line, you can index, and forever you'll have a fund that's outperformed. It's a bit of a trick of the funds management industry, but that is their focus. It's outperformance. So when the market falls 54%, as it did in the GFC, you'll see fund managers telling you, well, we only fell 51%. So we outperformed. In fact, I once went to lunch with a gold analyst at National Mutual who used to work in the gold industry. And we were having Christmas lunch, and we knew just before a Christmas lunch he was going in for his salary review. And he was the analyst who'd been brought in from the industry to analyze gold stocks. And that year, gold had absolutely bombed. And as he told you,
I have lost 50 million quid in one day.
Well, this gold analyst had lost everybody millions, and he turned up at lunch, bought champagne, popped the cork and said, you're not going to believe that. I don't understand your industry, but they have given me a huge salary rise and a bonus because I outperformed, despite the fact he lost everybody millions. And that is the funds management matrix at work, which says relative performance is more important than actual performance. But for you guys, actual performance is vastly more important. You're not interested in losing less money than the market when the market tips over. So self-directed investors really need to be doing what we do, which is timing the market, really need to learn to be able to sell in order to avoid the precipitous moments in the market and buy back in. Of course, how do you do that? It's difficult. You have to be hyper engaged. You have to be daily vigilant. You have to make decisions. You have to be decisive. And I think the only way to do that is be a subscriber of Marcus Today. You don't have to make any decisions at all. We're all over it for you. All you have to do is subscribe.